Welcome back. You're watching Stockwatch with me, Simon Brown. Joining me to take your stock-related questions this evening, David Shapiro from Sasfin Securities and Wayne McCurrie from FNB Wealth and Investments. Be sure to send your questions. Email stockwatch@bdtv.co.za or SMS 41392 or on X Twitter using the hashtag Stockwatch. Gents, appreciate both your time this evening. We sat here a week ago. We were waiting for a cabinet. We're still waiting for a cabinet. It better be a good cabinet. But anyway, let's start with a new listing on our market today. Wayne, we saw Rainbow coming out of RCL Foods. Rainbow, of course, way back in the day was listed on the JSE. I think it delisted around 2006 or there's about. And is there any attraction in what is a deeply cyclical company such as Rainbow? I mean, we can see from Astral, who are probably the best managers in the space, it is tough in the chicken business. Is Rainbow attractive?
No, look, I really don't like these primary commodity producing companies, whether it's the fishing companies or the chicken companies, or even some of the food companies. If they haven't got real value add, they're too cyclical. There are too many things beyond the control of management.
Yeah.
I mean, RCL stands for Rainbow Chickens Limited.
Yeah.
Now they're unbundling Rainbow Chickens Limited. And they're doing it because it's such a cyclical business and is detracting value from their other businesses, which are far more value add type of businesses. So I think that really summarizes it. If you get it right, you can make a fortune on these companies, but I just fundamentally don't like them.
David, I mean, Wayne's right. I mean, you've got problems of avian flu, you've got problems of maize prices, and I was looking at the Astral chart. I mean, you could have bought it at 120 and it went to 220. Of course, you could have bought it at 220 and it went back to 120.
I think it's as Wayne says. Look, it's a big business. I mean, they've got a lot of chickens running around the country. It's a huge operation, and but there's so many things that can go wrong when they get it right. You know, Wayne's dead right. It becomes very cheap. I think their whole aim is to keep the costs down, cost of chickens down, and through their various supply channels and so on. But anything can and it's more a commodity. When I say commodity, Wayne says it's a primary commodity. You've got to get the buying right. When you buy the feedstock, you've got to get it right, which is, I don't know what's made up of feedstock, etc. When you sell it, you've got to sell it the right. And then there's lots of competition globally. Those chicken wings fly in from all around the world as well. So you're constantly battling against that. But look, they're a decent operation, and I don't want to wish them any harm, but you've got to buy it when it's cheap.
Yeah.
That's the time.
Yeah,
that's the time to look at it.
You've actually got to time it. So Astral is literally, in 5 years, it has gone sideways. You've made zero money except for some dividends. And yes, they're chunky dividends at time, but I'm not sure it's thrilling enough. A question coming through from Rob came late last night. He's talking about Afriat. Wayne, Afriat's been doing quite well, running quite nicely. They've got the Lafarge deal, which they say is going to take about a year to really get it working. They're in all the right spaces, and Andries van Heerden and his team really do run a top ship. Considering the run we've seen, Wayne, is there still value there in Afriat?
Look, I mean, as you said, it's run hard, but this is, one of the only survivors here. And I actually do like the company, and I concur with you. So, maybe there is more upside because in theory, we're going into a period of stronger economic growth over the next 2 or 3 years with lower interest rates. And being one of the only survivors here in this field, maybe there is more upside. I mean, the valuation of the company is not high at all. So, maybe there is still a bit more upside in this share.
Yeah, and David, I mean, if we get a GNU and we start getting some GDP growth coming through, to Wayne's point, there's not many left. There's not many left of the OTEX listing boom. There's frankly even left in the construction space.
I think in their favor is management. They've managed themselves through all the troubles incredibly well. And that they're pitching at new highs again. I once did an exercise. I think this was before 2022 collapse, etc. I think if you looked at the time that they were listed, their returns, I think, almost matched Capitec. I think it's only the last 2 years that have. Yeah, if you go back to the original listing, and you've seen their growth, it's been quite phenomenal. But they got knocked back in 2022 with a general fall in markets and the fall in commodity prices and that. But it's a very well run business. And if you look at the chart now, it's heading towards new highs, trying to break through. Yeah. So
Yeah.
I go with Wayne as well.
Yeah, and of course they've got all the commodities in space now. They're way more than just the aggregate business they were when they listed some 17 odd years ago. Stuart is asking about Brait. Here's a chart that goes the other way.
Yes.
And I mean, it's a litany of disasters, horror stories, call it what you will. David, Brait, I mean, is there anything there? Is there? I mean, I saw was that Ethos Capital are like, yeah, no, we want out.
I think Christo Wiese is getting a second wind. You know, he's going into all kinds of Transex. He's going into all businesses. He's not slowing down. Remember, he was one of the original promoters of Brait.
Yeah, yeah.
You know, Wayne, I can't remember. He came in around about 2016, 17, 18, something. He was chairman. You know, at a time, I think he sold into it. I'm not quite sure. I can't remember the exact deal.
Look, he's been in there. He's been in there since the share price was 150 rand.
Yes.
Sure.
So I think you got a double whammy, that and Steinhoff, you know, all within a couple of years and that. But don't take anything away from him. So he's coming back for, I think, second innings. And but he's not new to the company, if that, you know, that's what we're saying. So new look, Virgin, who knows what he's going to do with it. But
that 150, Wayne, was only 2016. I thought you were talking like 2008 when they were a proper sort of deal making.
It's relatively recent, yeah. Look, Brait is quite clear. They're selling down the businesses. Yeah. They're selling. They've already listed Premier. I mean, they still own some Premier. They taking longer than what they anticipated. They've had to roll forward the loans, etc., etc. But it's a clear intention of theirs. They're winding this business down. And really, the peak of the share price was when they bought New Look.
Yeah. Oh, that's right. New Look was the
a catastrophe.
A catastrophe. 150 down to $1. But to your point, they unwind it and ultimately they give money back to shareholders, but nothing like you could have got if you'd sold way back then. Tristan's asking about British American Tobacco, 5 times forward multiple. Philip Morris way more expensive. Menthol ban potentially coming in the US. Wayne, British American Tobacco, also a good dividend yield, also sterling dividend. I mean, broadly, ex-growth, they're defending their market, but they're paying good dividends, and they're still, global leaders in the space.
Look, I'm not as positive nowadays about BAT as what I used to be. The slowdown in actual cigarette sales in combustibles is way, way quicker than what they and I anticipated. You know, you used to have the 2-3% a year. Now it's 5-6% a year. They've managed to maintain their margin by pushing prices on their premium brands.
Yeah.
They can't do that forever at all. The non-combustibles, the new age, new product, whatever you want to call it, I mean, it's showing tremendous growth, but it is still a country mile away from, the original market that actual combustible cigarettes had. I mean, I know it looks cheap. I know it's got a high dividend yield, but it is definitively ex-growth. I think they're better and cheaper companies to put your money into.
Yeah.
If you bought this 5 years ago, you're back where you are. You know, you haven't made any money on it over a 5-year period. It's gone up, it's gone down, it's gone all over the place, but you're still at the same, you're still like Monopoly. You've just gone round in a circle or a square.
And you're taking some dividends along the way. But I take your point,
yes,
and particularly Wayne,
yes.
the combustibles are going south quicker than they thought. They've got challenges on the vaping. That's not sort of picking up the slack from it. I take the point. Some defensive stocks are nice.
If you want to smoke, you still got to do it behind the change room, and not get caught, type of thing. It's a very difficult area.
I just go into the balcony. I don't need to sneak behind the change rooms or anything like that. There's another one from Tristan. He's asking about Thungela Resources. I mean, coal price has been under a bit of pressure, but when they've got a ton of cash, they still make money. I mean, their biggest problem, the coal price, frankly, is Transnet.
Yeah, and that will come right over time. But you must remember, it's a normal commodity company. There's nothing different to this in comparison to Kumba, comparison to Exxaro. This was an absolute darling. It went from $50 to $400. Now it's back at $100. And who knows, it might go back to 200, 300 Rand in the commodity upcycle when the coal price picks up, because, irrespective of the move away from fossils, there's still going to be demand for coal for a number of decades to come. And no one's put any capex into coal. Remember, a couple of years ago, banks wouldn't even lend you money to do capex in any fossil fuel. So the outlook for coal, the moment demand picks up, hopefully on the back of lower interest rates, is actually quite good. But it's a commodity play. I mean, you can buy the platinum shares, you can buy Kumba, you can buy a lot of other companies. So, I certainly would not be selling now. And, if I'm right about the commodity cycle, and of course that's an if, probably huge upside in the share.
David, I mean, they've bought that Queensland operation, which reduces some of the Transnet risk that we're seeing. And certainly, as much as there's a move, I did a lot of research about a year and a half ago. There's like 95 power stations being built around Asia, coal-fired power stations with 40-year life of coal isn't disappearing. Thungela for you?
No, it's not, but the premium's disappearing. And I think that's a problem. They made those heavy prices you were talking about, I think, were made after Russia invaded Ukraine, and there was concerns about where oil prices and commodity prices were going, particularly energy prices. I think that's gone for the meantime. And, if you look at where the share is heading and prices are heading, if anything, they're just crawling sideways with almost a downward drift. So it's not a desirable investment. And I think it's going to be very hard for people to buy into coal. I'm talking from our point of view, an investment point of view. But Wayne's right. Coal's not going to go away, as internal combustion engines are not going to go away. But I think the new energy, the new development is going to be away from that. And just aside, Simon, when you look at the new data centers, what they're calling data factories, which all have to be powered, they're all going to be powered by solar. I know you want to go into nuclear as well, but all I'm trying to say is that, this is the way kind of the world's going, particularly in energy space at the moment. So, yeah, they'll do okay. You'll get good dividends. If Wayne remembers way back in the 1970s, well, he wasn't there 70s, but the 80s and that, used to buy coal companies at 12% dividend yields and 14% dividend yields. Yeah.
No, even
there was Amcoal. Amcoal was the big one.
Transnatal Coal, TNC, Gem Coal, all of those companies. General.
I can remember Transnatal and Amcoal.
And chunky dividend yields. That's what you expect from them. Omar's asking about Stadio. We've got three in the education space: Kiro, Advotech, Stadio. Wayne, Stadio a pick in. Education certainly is something I think that, if possible, parents will spend on. It's tough out there for a consumer, but they're happy to spend on it. Your take on Stadio, or perhaps one of the others, is better?
Look, they suppose 10 years ago in Kiro and everything, these were just absolute winning companies.
Yeah.
A bit of the shine has come off them, but Stadio doesn't look particularly expensive. It's certainly got a higher rating. Maybe Kiro is a better bet, but I still like the sector. They're growing student numbers. As I said, I think they're cheaper shares, but it's not a bad share at all at this sort of price.
Yeah, I think they also seem to be over the capex. The heavy capex at this stage. And, they more or less act as a college which sells other products. They haven't got they like varsity college in a way, etc. But they're doing a good thing. And if you looked at the last set of results, the amount of people who want to study is quite remarkable, particularly those that do it, what do they call it? Not offline,
Distance.
Distant learners, it's incredible. So there's still that thirst here, and there's still people or parents will pay enormous amounts to educate their children. So they're in the right space. It's just as Wayne says, maybe it's a little expensive at this stage, but it's not a bad business.
And we haven't built many new universities in the last decade or two. That's exactly where Stadio comes in. And with the distance, it makes it a whole lot easier. You don't have to come to Braamfontein to get to Wits. You can do it from the comfort of your home. Question around Pepco. Actually, truthfully, I'll be honest. Every time Pepco results come out, I really like them. Brazil's doing okay. Their flash business is doing great. 7 out of 10 smartphones in South Africa are sold via Pepco. In fact, my wife bought one, a chocolate bar phone. I think it was 150 Rand recently.
Yeah.
It does nothing but make phone calls and do radio. But nonetheless, Wayne, what about Pepco? Because they're one of the clothing retailers that's lagged a bit in the last couple of weeks.
Well, look, when they had that big placing last night, the night before, 400 million or something.
Yeah.
But no, look, it's perfect. It's not an issue at all. Valuation looks quite good. Maybe if you want to take a punt, there might be a cheaper one. Spar might be a bit cheaper, although it's not quite the same, obviously. Mm-hmm. But I still like it. I mean, it's astonishing you can buy a cell phone now for the price of a cheap steak.
Yeah, and a cheap steak, not a good steak, a cheap steak.
A cheap steak, not a good one.
Yeah. Your take, I mean, David, and that's so, as Wayne said, I mean, there's still the overhang. I can't remember what Steinhoff calls themselves anymore. They've got a new name, but that was the Pepco.
They've still got that, I always liked the company because wherever you go in the country, you see the sign, Pep. And I mean, it's an incredible business, and I always associating with the little grey pants, white shirt, school, and those grey shoes and that. And yet, they never quite seem to match up to where I think they should be. And I think it's another one of these retailers which, if you bought 5 years ago, you've gone nowhere, or it's just gone sideways, up and down, all over the place, and that. But as a business model in this country, it should be probably doing significantly better than it is. Why I say that is that's my expectations of where they should be, but they haven't quite reached it, So it could be the economy, But I've always, ever since, what was it, Dwayne Rainier van Rooyen? I think it was his business before Visa got involved in it. Yeah, always a very, very good business, bottom end of the market, but good products.
Yeah, and as you say, a cell phone for the price of I mean, nothing fancy. Shavesh is asking, David, he says, thank David kindly for his superb stock pick way back when. Novus, is it time to sell or is there further upside?
No. Much more further upside.
Okay.
Novo Nordisk.
Yeah.
And Eli Lilly, they haven't, this market is at the moment insatiable. This is the weight loss drugs. And I think it's going to continue. Sales are going to continue. They just have to find the facilities to actually make the pencils, or what they call the pens or something, and also the product. Yes, there will be competition coming down the line, but for the meantime, it's still a massive area. And the effects are enormous. When I say the benefits of this drug on other diseases has been quite remarkable as well. So on all kinds of addiction, even I saw on sleeping now, on what's it, apnea.
Yeah.
What's it?
And apparently also on drinking and on smoking, and I mean, basically, it wants to take all the fun out of your life. It's just trying to suck fun out of your life.
You take those drugs, you lose weight, and you just lie there and don't do anything. You don't feel like eating. You don't feel like watching anything. You don't feel like you just lie there. Yeah, you did right.
100%. Wayne, you then asked you. Sorry, Wayne. Yeah.
But you thin.
But you're thin. Yeah, I know. You need to be thin. When he's asking you about Anglo Platinum, still a buy. I mean, the thing with commodities, and you know this, you've been through cycles, so have I, they're painful. I mean, the PGM cycle turns. We don't know when, but when it does turn, these things take off.
Yeah, look, I mean, if you look at the reaction of the share price going up in the commodity up cycle, I mean, the return is spectacular, but in the down cycle it kills you. But hopefully we're at the bottom of the down cycle now. Now I know I've been wrong so far on this one, and of course you only remember, and the viewers only remember the mistakes you made. But there is huge upside here. If we get a commodity up cycle, I mean, the platinum price can go up enormously. The palladium price can go up. They'll go up more in dollar terms than what the rand strengthens. Mm-hmm. and you can get Anglo-Plats. I mean, from this current share price, it can way more than double, because that's what it does. That's what it does. I mean, in the China years, and we're not going to see the China years.
Yeah.
I mean, this share went from $60 to 1,200. Eh?
I remember that. I remember those days. And the point is that the signs are there that we're at the bottom of the cycle. Production being taken out of the market, everything else. The trick is, of course, when does it turn? But let's go to our stock picks. Wayne, stay with you. You're going with Richmond.
Yeah, and it's not this whole story about LVMH possible takeover, etc. I mean, this is a very good company. It's obviously centered itself now in the luxury, in the watches and jewelry side, which could benefit enormously from lower interest rates going forward. And it's not particularly expensive. I mean, I know that when you look at Richemont and you look at the price earnings ratio, it appears to be expensive, but it's actually reasonable value for Richemont at these sort of prices. So yeah, that's my stock pick there.
Yeah, and of course, they always sit on, I think, 4 billion euros. And if you take that out of the market cap, I mean, they're earning a truckload of interest on that every year, nonetheless. David, your stock pick is Costco.
Yeah. The reason is this was Charlie Munger's company. And we ignored it because we went for Amazon and we went for Walmart. We wanted, you got to buy online. And they're not an online play. This is where you drive in your SUV, or what do they do, those double cabs, etc., and you just buy in huge quantity, and you become a member. You have to have a member card like Macro. But I think that I've watched over the last year and a bit. They've gone up 100%. I thought I'd better start looking a little deeper into it. And they're, all the metrics that you look at. I know we haven't got enough time to go through them all here, but the metrics all point in the right direction. Wonderful company. And if Charlie Munger said this was almost the perfect company, then I'm inclined to believe him.
Yep, and you pay $100 a year for the privilege to shop there, and they have like a 1% churn or something completely crazy. But I mean, it boggles the brain, but it works and it makes money. We'll leave it there. That's all for tonight. Stock Watch. Gents, thank you very much to our guest, Wayne McCurrie from FNB Wealth and Investments. He's going with Richemont. David Shapiro from Sasfin Securities going with Nasdaq-listed Costco. Up next, the close. Stay tuned.